So this is gold on the weekly time frame. I've marked out two levels. These are psychological levels. The first level is 3100. Level right here is 3100. Level right there is 3400, right? So price is ranging between these two levels. It hasn't yet broken out to either side. So we're expecting market, if it is to break out on either side of these two ranges, we're expecting it to drop. If we break below, the market buys and then takes out most of the orders here, because it's the highest point that market has reached so far, which can act as a very clear point of liquidity. This level right here is a very clear point of liquidity. So simply put, if I want to see market go up there, possibly up there, and then we can take sales from that point. So we shall sell. So market first of all goes up, and then we sell, right? That's what I'm looking for. Market goes up, clears most of the liquidity that side, makes a fake out, then we sell. That's what I'm looking for. So if I go to, let me first move these arrows. Now that I have some bars, I can just simply go to the daily time frame. What is the daily time frame telling me? Price is ranging. So we have another two key levels. What do we see on the daily time frame? Well, as you can notice, if you've noticed already, market is starting to sell, right? So we shall draw our trend line here. We shall make it red too, so that we don't confuse it with shall make it another color, maybe green. And we shall save. Alright, now if you can see, market is in a bit of a strong downtrend, right? A strong downtrend. But now, where do we expect market to go? Likely, if I'm to expect market to go anywhere, we expect it to sell. If we are to sell, we have a key psychological level at 3100, right? So at 3100 we have a key psychological level, but also we have another, you can also draw another trend line. So let me just show you. All right, here we have another trend line here. So this level is at 3100, so that you know, but you can also put at 3150. I shall make a video explaining the psychological levels. Alright, so at 3150, this is where the market is currently. If market breaks to the upside at that point, I'm expecting it. I just want to see what the market does, what market gives us. On the low time frames, I've already bought. Yeah, I've already bought, expecting price to at least push towards that area there, towards this area here, which earned me about $400. But as for now, I can simply just wait for the market to give me a clear direction. So I can simply go to the H4 to even refine my entries even further. Go to the H4. What do we see on the H4? Well, on the H4, what we see is a kind of, at 3290 market is facing resistance, right? We have a small minor resistance at 390. Let me just show you what I mean. So I draw my another, but instead I'll make it another color. So let's make it let's make this color red. Let's make it red. Red is too purple. Okay, purple. We shall dot it also, right? All right. So on that, let's not dot it. I think dotting it makes it weird. Let's make it a straight line. All right. So on that purple line, we see is that we have to put it at 390. So 3290, and we shall save. So the 3290 level has already been broken on the smaller time frame. Price has already broken the 3290 level, right? Now there is no clear direction of this market. There's no clear cut direction where the market is going to go, but I can simply just make assumptions. My first assumption is that I want to see market break this low here. That's the first swing low that we have on this market. The nearest swing low is that one. Also, I want to see market take out some orders here at the top around this level here. I want to see market push through that level. So either way, I want to see market go either up or down. But now there's a strange pattern. I don't know if you guys have noticed, but we have another strange pattern. Let me show you the screenshot. So there's what they call a Quas model, right? So with the Quas model, I didn't shoot it very properly. Let me first shoot it again and I'll show you. Alright, so shall edit, right? Let's do that. So I don't know if you have seen, but price has come up, gone down, come back, gone up, then come back down, right? So in a Quas model, we have a kind of a pattern whereby at this level here where market has made a this is a head, that's the first head, and then we have here is the left shoulder, here is the left shoulder, and we are currently forming the right shoulder, right? So what does that mean? Well, if you remember most of these patterns very well, you will know that for a Quas model, once we have a Quas model like this, right, it will break this neckline. After the break of the neckline, we can take in our buy entries. Most people want to take their buy entries after the break of that neckline, but for me, what I want to see is that I can even trade this. For instance, if we have a left shoulder which is currently forming, I can simply just place in my buy positions, knowing that we are likely to clear this neckline around here. This neckline is around to be cleared. That's why I can simply just take in my positions. So anyways, and at this point in the market, as I've told you, this is our neckline. The where I've put my shadow zone here is our neckline. So if market is able to break that level and continue all the way upwards towards at least this level here at the 3400 level, that's where I'm taking my buys to that area. But if market decides to sell, what I want to see is actually market now. We shall now go to even the lower time frames. Maybe let's go to the M30 and I'll show you what I see. So on the M30, we have a clear Quas model, right? We have the head, we have the head, we have the head, the right, we have the head, the left shoulder over here, and the right shoulder which is currently forming. So if we had, given that we have all this in mind, we can now simply be in the position to take in our buys, confidently taking in our buys. But now what I wouldn't advise you to do is actually placing big lots, because in most of the cases big lots will blow your accounts. This is a daily time frame structure, so if we were to hold this trade, we know that market will likely pull back a little bit before going into a direction, and because of this we are not certain where the market will stop. So you can't just simply just place in your buy orders. For instance, this account, I placed in some very huge buy orders, but I'll be closing in after some small movement, because to manage my risk, I'll just be closing in with a few good pips. Maybe after we grow this account to maybe like 1k, then we shall close our profits. But as for now, I can simply just give out this signal. Yes, I can share this signal on Telegram. You can also be observing this trade. For a more clearer setup, if you have the real time and energy to be patient, the real setup is actually when market breaks this level here. When market breaks the neckline, That's when you can take in your buys confidently. Like you would have no fear at all. Rather, you will be confident enough in your approach for your buys. But if you are not in the know of how this works, you should be careful, because market can reverse at any point at this point. So you have to also be careful of that. Thank you.